Hello, everybody. This is Professor Hassey. It's Friday, November 15th, 2019, and this is our week number 8 update video for our Business 635 Managing Financial Resources class. And I'm speaking, as usual, from Business Finance Central in chilly Claremont, California. Chilly for Claremont, anyways. I hope all of you are doing well. We have a lot of activities going on in our class right now, and I hope you're all able to keep up with them. I didn't have any questions last night in my WebEx office hours, so I assume everybody is doing fairly well. But two main tasks this week, the case number 3 work, which I'm going to talk about in just a minute, and the continuing work of your Electrics Incorporated case, which we will have a little bit more substantial work on it next week in our discussion forum and in some videos next week prior to the Thanksgiving break, the Electrics Incorporated case. But this week we're talking about alternative capital financing, we're talking about leasing, we're talking about capital equity investment, we're talking about different ways companies can acquire capital than the traditional ways of borrowing money from banks, issuing bond debt, issuing IPOs or stock, different ways companies can acquire capital and the strategies involved with them. And that brings up our case number 3, which is right here. And this is due Sunday, November 17th at midnight. Basically 3 classes, and the format for this case is optional for the student. I've had some students indicate to me they're doing it in a PowerPoint presentation, which is fine. That's great. Other students are just writing the answers out in a Word or PDF file, and it doesn't even have to be APA format. This is a free-flowing example of your work. Whatever is comfortable to the student is okay by me. The first question involves leasing for small businesses. Why is leasing an advantage for small business? What's the definition of leasing? Why do companies lease equipment, people, buildings, whatever? What is attractive for the small businessman or woman in leasing? Question number 2. If you were creating a business today, that's a loaded question. Would you? Why or why not? Using the discussions that we talked about in week 6, what type of business would you choose and how would you finance if you were to start a company today? Remember, small business financing is a little bit simpler or less complicated than corporations. You can get angel financing, angel investors, family, friends to invest in you. You can get venture capital, private equity capital financing. You can get small business administration loans from the federal government, which is the government is backing you as a small business and guaranteeing your loan that will be paid back to the issuing bank, called a small business administration. But why would you start up a company today? Maybe some of you would not start up a company today, and what is the reason for that? Your answer should be a minimum of 2 pages, double spaced. If you're using a PowerPoint presentation, that should be roughly 4 to 5 slides of information. So I want to know what's your feelings about starting a business today. I know many of you, in my discussions with some of you, you're in small business now or also thinking about starting a business. This might prove advantageous to that thinking that you're doing. In question number 3, what are the definition of mergers? What are the primary beneficiaries in a merger? Who makes out in a merger? Is it the stockholders? Is it the management team? Is it the employee? Is it the customers? Is it the vendors? Please give a real-world example of a successful merger and an unsuccessful merger. Why were these mergers successful and unsuccessful? Now, you could write a whole lot about this type of subject, but I want you to spend maybe a half a page or a page on what is a successful merger and what is an unsuccessful merger. In other words, why was it unsuccessful? Was it a people thing? Was it a personality thing? Was it a culture thing? Or was it primarily numbers, finance, business, markets? What makes a successful merger and an unsuccessful merger? I need some specifics. What are the dates involved in the merger and the dollar amounts of the merger? That's about it. I don't need many details about the numbers. Just quick research about a successful and unsuccessful merger would be appropriate. And by doing this case, we're looking at the definitions of different types of financing, both small business and major corporations. What are other ways companies can attract capital? Now I brought up the electrics case, just a couple of more points. I should start seeing, maybe from some of you, some drafts of your spreadsheets about beginning to put this together. Remember, we can use the templates that are posted in Blackboard as examples of this. Remember, this is an 8-year project with an investment of $17 million. All right? And that $17 million is going to produce a product that's going to include a motor, an electric motor, and a controller which manages that electric motor. This company is thinking about putting together a product that will compete in the sustainable type of markets that we have today. Tesla, Toyota, Ford, General Motors, Kia, all kinds of companies around the world are now beginning to switch over to electric cars. Why is that? More sustainable, less carbon. And so this company, Electrics, is thinking about to do the same thing. They have 3 different scenarios, different probabilities of prices of electric motors in the market, number of units they will sell every year. But based on those scenarios, they have the exact same cost for no matter what scenario. $4,250 per motor, $2,500 per motor for parts, a fixed cost of $9.5 million for SG&A. For the controller part of the cost, $1,280 per unit, per motor. And then you have the warranty costs. For the CTX version, $165 a year for 5 years. For the MT78 version, $175 a year for 5 years. Now, what do I mean by those 5 years? Every unit produced, years 1 through 8, has a warranty. That warranty is going to be over a 5-year period. The company estimates the cost of the motor and the controller warranty that cost them to plan for failure is $165 a year or $170 a year, $175 a year. Your job is to incorporate those 5 years into one number, the warranty cost per unit. And you can use the present value of this to determine that present value, because every year you will have a warranty cost for every unit. You isolate that cost by doing a discounted present value of those costs over 5 years. In addition to that, you also have working capital, 10% of annual sales. We've been over that. But this is driving a lot of people nuts. The financing, determining the cost of capital, WACC. It's the cost of debt and the cost of equity. But what is the capital structure of the company? It tells us right here. Historically, the company tries to maintain a debt to equity ratio of 0.5. The debt to equity ratio is 50%. That is not the debt to assets ratio. That is not the equity to assets ratio. Remember, in the capital structure of calculating weighted average cost of capital, you take the percentage of debt to assets, weight it to the cost of debt, and the percentage of equity to assets, weighted to the cost of equity. But in this case, you have to calculate out that capital structure using the data of debt to equity of 50%. See if we can do that. The tax rate of the company is 35%, the inflation rate is 3%, and the cost of debt is at the high end of the A range, and the cost of equity is a treasury yield or risk-free rate of 3%, a market premium of 6.5%, and a company yield of 1.35. Using the capital asset pricing model, you can determine the cost of equity. The only other little thing you might want to take a look at is, with the information given to you about the beta of other competitors, Is the 1.35 an accurate beta to use for this company? Should we use what is called an unlevered beta, where we keep out the cost of debt involved in the company's risk? You might want to research that a little bit. So over the next couple weeks, especially next week, we will be talking more about the Electrics Corporation and this case. We will be having another group discussion forum on the Electrics Corporation, actually doing hard analysis and numbers to help out our students and making sure everybody's on the same page as we get to the writing phase of this. So if you can this weekend, begin to take a look at this, begin to maybe map out a draft of your spreadsheets. Remember, you're going to be putting together one spreadsheet for the week scenario for the CTX motor and product, one spreadsheet for the average scenario for the CTX, and one spreadsheet for the strong scenario of CTX. Doing the same thing for the MT78, that's 6 spreadsheets, 6 tabs. And then 2 more spreadsheets to determine the sensitivity analysis of this. Look at your rubric. You are asked to do a sensitivity analysis for 2 variables, and we'll talk more specifically about that next week in our discussion forum. All right. Okay, to wrap up this week's midweek video, you might want to refer to Blackboard for a description of alternative financing strategies. There's some good videos talking about examples of IPOs, of talking about mergers and acquisitions, and to talk about what's the definition of these other capital strategies that can help you in your case number 3 work and work down the line in this class. Again, I'll be available this weekend for any help you may need or any discussions. I urge you to do that. Next week we will have a discussion forum as a group, as a class in Blackboard to talk about the Electrics Incorporated case and begin to finalize all those spreadsheets you need to put together for the analysis before you can write, and we'll talk about that in specifics next week. Everybody have a good weekend. If you have anything, please let me know. We'll talk to you soon. Hold a minute. Let me just bring this back so I can say goodbye to you. There I am. Okay. That's a little bit more official, Mr. Hassey. So again, work on case 3 this weekend. Any questions in that regard, let me know. Also, Electrics Incorporated, you all should begin working on those spreadsheets because we only have a couple more weeks left to go in this class, and you have one other case after this one, the last week of class to finish up. So the workload will be tough, and so anything you can do to alleviate that with your electrics work, you should begin working on that this weekend. Thanks, everybody. I'll talk to you soon. Bye-bye.